The Chinese e-commerce giant Alibaba is preparing for a secondary listing in Hong Kong. The company, which is already traded in the US, hopes to raise up to $13.4 billion from the IPO. The move is seen as a boost for Hong Kong, which has been plagued by violent anti-government protests and escalating tensions over the last 5 months. Alibaba chief executive Daniel Zhang commented, "During this time of ongoing change, we continue to believe that the future of Hong Kong remains bright," describing the city as one of the world's most important financial centres. Mr. Zhang, who took over from Jack Ma as chief executive earlier this year, has said that he hopes to contribute to the future of Hong Kong. Alibaba will offer 500 million shares at a price of up to $24 each. Of those 500 million, 12.5 million will be reserved for retail investors. The company has also reserved the option to increase the portion available to retail investors to 50 million shares, or 10% of the total offering. Shares are due to start trading on the 26th of November. The company have stated that they plan to use the proceeds from the offering for the implementation of its strategies of driving user growth and engagement, empowering businesses to facilitate digital transformation, and continuing to innovate and invest for the long term. Alibaba was founded in 1999 in Huanzhou, China by Jack Ma, and has grown from an online marketplace into an e-commerce giant, with interests ranging from financial services to artificial intelligence. The company had originally considered a Hong Kong IPO when first going to market, but after failing to secure regulatory approval for dual-class stock, they opted for New York instead, listing there in September 2014. They have stated that the new listing will allow investors across Asia to participate in Alibaba's growth as it seeks to tap substantial new capital pools in the region. Alibaba have stated that New York will remain its primary listing venue, with its US listing still the largest IPO in history, raising $25 billion. The move to proceed with the IPO in Hong Kong comes after Alibaba reportedly delayed plans to list there earlier this year amid growing unrest in the city and the US-China trade war. The protests in Hong Kong, which started in June against government plans to allow extradition to mainland China, seen by many as a curb on freedoms, have hurt the economy. Hong Kong is now in recession, and business confidence in the city has been severely knocked. Whilst the extradition plans were withdrawn by leader Carrie Lam in September, the demonstrations have continued, with protesters calling for an independent inquiry into alleged police brutality and for democratic reform. Alibaba's Hong Kong listing would make it the biggest fundraising of 2019, beating Uber, which raised over $8 billion in May. It would, of course, also be a huge boost for Hong Kong, which has seen fears over its future as a global financial centre grow amid the escalating violence and protests across the city.